Hello, everyone. My name is Marilena, and I will be your hostess for today. Together with me, I have Peter, our senior market analyst at IronFX. Hello, Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So, Peter, how have the markets been behaving?
Well, we had a rather positive market sentiment. It was characteristic how practically the US dollar continued to retreat against a number of its counterparts. I would be highlighting practically the US dollar's retreat against the euro mostly, as we had fundamentals which, on the one hand, tended to produce safe haven outflows for the US dollar, while on the flip side, we had also fundamentals which tended to provide some support for the euro. Headlines more or less mentioned that Gazprom may be reinstating gas supplies to Europe, and that tended to practically eliminate a major factor of uncertainty for the Eurozone. At the same time, we note that Euro traders are focusing now on ECB's interest rate decision tomorrow, and the bank is expected to make a hawkish pivot. Now, whether that's going to be enough for the euro or not, that's questionable, but it's on the table. And I would dare to note that overall, the positive market sentiment was even more evident in the US stock markets. We had all three major indexes, the Dow Jones, S&P 500, Nasdaq, all were in the greens. Maybe with Nasdaq gaining the most, traders' attention is still on the earnings releases, which are due out every day. So, should we see this market sentiment being continued, we may see US stock markets as riskier assets gaining further ground today.
Okay, interesting. And what earnings reports would you highlighting today?
Well, today I would be highlighting practically Harley Davidson. That's an
Okay.
interesting one. Gets lots of attention, has lots of traders. I would be highlighting, though, even more interesting and with a more solid and larger fan base would be Tesla. Uh, there has been lots of rumors about Tesla. Tesla may continue to gain some ground here should the earnings results actually excite traders, especially Tesla's fan base and Elon Musk's fan base. And the third one, I would also be mentioning Alcoa. Aluminium is in an issue, and Alcoa, I think, would be quite interesting to see how its earnings behaved over the last quarter.
Okay. Is gold price still in sideways movement?
Yes, actually, gold price remained quite stable. One would expect that gold's price could gain, benefiting practically from the US dollar's weakening, as the two trading instruments tend to have a negative correlation. Whenever we have a strengthening of the US dollar, gold's price drops, and vice versa. Whenever we have a weakening of the US dollar, gold's price rises. This does not seem to be the case in the past few days. I would note that yesterday we had a rise of US yields. Mind you that US Treasury bonds tend to be a counterpart practically for gold in the safe haven area. And whenever we have a rise of US yields, that tends to weaken the gold, as practically gold is a non interest bearing trading instrument. In addition to that, it also has storage costs in practice. And overall, should yields continue to be on the rise, we may see some bearish tendencies for the precious metal.
And how about oil prices?
Oil prices were on the rise,
Uh,
and they were on the rise despite AP reporting another substantial buildup of inventories in the US oil market. It would be characteristic that the last reading was of around 4.7 million barrels. This one was of only 1.8, but still was what was expected. So I think that we may see oil traders turning their attention today also in the EIA crude oil inventories figure on the commodities fundamentals. Any worries about demand could weaken oil prices. On the flip side, should there be a tightening of the supply side for oil, we may see oil prices gaining further ground.
What do we have on the calendar regarding upcoming releases?
Yeah, we would make a start with UK CPI rates. We had an acceleration beyond market expectations. The year-on-year rate accelerated to 9.4% year-on-year. However, I wouldn't be seeing the release of the CPI rates as an isolated event as such for pound traders. We have to understand here that the pound got some support also from the better than expected employment data yesterday. We should note also that BOE Governor Bailey yesterday stated that a 50 basis points rate hike would be an option for the bank in its next meeting. And given that we had also an acceleration of the CPI rates, we may see the bank actually proceeding with such a rate hike, but that remains to be seen practically. Overall, there is lots and lots of working about for the pound, also on a fundamental level. Don't forget that the race for the replacement of UK Prime Minister Johnson as the leader of the Tory party is still on. And I would expect pound traders to be quite busy in the next couple of days until the end of the week when we get on Friday UK's retail sales growth rate as well. Other than that, I would be noting that we're getting today in the American session Canada's CPI rates. They are for June, and should we see an acceleration, especially of the BOC core rates, we may see the CAD getting some support, given also the slight rise of oil prices and a possible acceleration of the core CPI rates in Canada could be exercising additional pressure on the BOC, which, mind you, is already quite hawkish. May I mention here that the bank in its last meeting had delivered an outsized large rate hike of 100 basis points. And adding further pressure, that would be quite an issue for the BOC, as despite the continuous rate hikes, CPI rates seem to be continuing to accelerate at new levels. However, once again, I would like to see how the release will play out and what the actual rates will be before making up my mind. I would be also noting from the US the existing home sales figure. And oil traders who have already mentioned EIA's weekly crude oil inventories figure. Any surplus, any buildup of US oil inventories above prior around 3.3 million barrels could weaken oil prices, as that would imply that the slack in the US oil market would widen. Other than that, I would be noting also from New Zealand during tomorrow's Asian session, we're getting the trade data. Should we see a widening of New Zealand's trade surplus, that could provide some support for the Kiwi, given that it would imply that the New Zealand economy practically benefited more from its international trading transactions over the past month.
Okay, anything on the monetary front?
On the monetary front, I would be okay. We have some policymakers from BOE making some statements in about half an hour. However, the highlight is definitely expected to be BOJ's interest rate decision tomorrow during the Asian session. Now, the bank is widely expected to remain on hold at minus 0.10%. That is not the issue. It's characteristic that JPY or S imply that the market almost has fully priced in such a scenario. The main issue for the decision is whether the bank in its forward guidance will be sticking to the script, actually maintaining a dovish stance, maintaining its yield curve control policy unchanged, as practically keeping yields at near 0 to a quarter of a percent level. That could imply that the bank may have to buy substantial amounts of Japanese government bonds. So overall, we see the case for the bank to maintain its loose monetary policy. And should that be the case, we may see JPY weakening, as practically the loose monetary policy of BOJ would be widening the interest rate differentials between BOJ and other central banks like the Fed, which is already hiking rates, or BOC, which is doing the same, or even ECB, which is about to hike rates tomorrow.
Any final comments?
Well, it's a big question whether the market's going to maintain this positive market sentiment which it had displayed yesterday. And I think that should that be the case, we may see the US dollar suffering further safe haven outflows. At the same time, we may see also riskier assets such as commodity currencies or stocks benefiting. And that could also provide a chance practically to other currencies to shine, to come under the spotlight. However, I would like to see how the American session will practically start today in order to draw more substantial conclusions about the markets.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
So, welcome to the technical analysis part of the presentation. As always, we make a start with the USD index for our chart. Yep, that's it. Let me make the necessary adjustments. In the daily chart, the downward motion of the index is more obvious. You can see that we are talking about 1, 2, 3 days of dropping. We are currently in the 4th day. However, the upward trend line still remains intact, and we would expect for a bearish outlook, a clear bearish outlook, the price action to actually break it, and I would require also a clear breaking of the 105.55 support line before calling in the bears for the index. On the other hand, we have to note here that there is still some room for the bears to maneuver, given that the price action is still above the lower Bollinger Band after its stabilization yesterday in the American session, and it also has some considerable ground to cover between the 105.55 and the upward resistance line, and the actual price action. So we have this space here where there could be further bearish movement. On the other hand, should the pair drop and actually bounce on the upward trend line, we may see it reversing and aiming for the 107, sorry, let me readjust this, 107.50 resistance line. Before that, though, and in continuance of the possibility of a bearish outlook, we have to note here that the RSI indicator is quite low, actually pretty near to the reading of 30, which tends to imply that there may be some bearish sentiment still left for the index. On the other hand, the RSI indicator seems to be slowly but steadily rising, which may imply practically that the bears may start losing some steam here. So should a stabilization take place, I wouldn't expect it to be beyond the R107.50 and the S105.55. Most probably somewhere here. On the other hand, should a bullish outlook prevail, given that the bulls may say enough is enough, we would require a clear breaking of the 107.50 and the price action to start actively aiming for the 109.50 so that a new upward trend line, or actually a new steeper upward slope, would start to make its presence felt. For the time being, once again, we wouldn't be surprised to see the price action actually dropping further, given also that the index has performed continuous lower trough and lower peaks. Once again, though, note for the upward trend line, note for the 105.55. Let's have a look at Euro USD. Euro USD's forward chart. The pair is reflecting practically the stabilization, the rise, the drop, and the stabilization of the US dollar. Let's have a look at it. In the daily chart, it's more obvious. You have 1, 2, 3 days of consecutive winnings for the common currency against the US dollar. Yet this stabilization here tends to create some question marks. On the other hand, the RSI indicator seems to remain pretty near to the reading of 70, implying also a rather bullish sentiment for the pair. Should the bulls actually maintain control, we may see it bouncing practically on the upward trend line and aiming for the 1.0355. We should note that on a daily basis, let's zoom this in a little bit, we had volatility for Euro USD yesterday of around 150 pips. On Monday, the volatility was of around 130 pips. And on Friday, the 15th, was of around 100 pips, not even. So practically from Friday to Monday, volatility rose to the upwards. From Monday to Tuesday, volatility rose even further, once again to the upwards. That remains to be seen now, whether this behavior of Euro USD is going to be repeated today. Under any given circumstances, the upward trend line tends to imply so. If that's the case, once again, I wouldn't be surprised to see the price action rising, breaking the 1.0485 and start aiming for the 1.0605. At this point, it's interesting to note that in the daily chart, if we zoom a little bit out here, that's even more practical, you can see that there was a continuous downward motion of the pair, and that has been since the 10th of February 2022. And I would note that should the bullish movement be maintained, we may see the two trend lines, the one which is in the long term and starts from February and it's downward, in conjunction with the one which started on the 14th of the month, and this rather fresh meeting. And that would be an interesting point for Euro USD. For the time being, we still see the rise as temporary, and we may see it practically reaching up to this level, and that would be the make or break point for the pair. However, for the time being, we have also to reaffirm that the stabilization, the recent stabilization which has started in the American session and the late European session yesterday, will not be maintained. Should it be maintained, we may see the price action of the pair actually breaking the upward trend line, remaining around the 1 point, just above the 1.0210 support line, while a bearish outlook would practically cause the price action of the pair to initially break the upward trend line, definitely break below the 1.0210, and we would expect it to start actively aiming for the 1.01 support level. Note how the S2 provided support here and resistance here and here. As the ultimate bearish scenario, we set once again the parallel level of the pair. For the time being though, and as long as the price action remains above the upward trend line incepted since the 14th of the month, we tend to maintain our bullish outlook. Let's have a look at GBP USD. GBP USD, which is on the rise once again though, there is one stabilization and the pair seems about to test the upward trend line, which was incepted since the 14th of the month. Let me reaffirm this. Yep, since the 14th of the month. And we may see cable starting to rise, breaking the 1.2070 and start aiming for the 1.2175. Let me make the readjustments here. Here we go. And that would be an indication that the bulls still have the control over cable. On the other hand, should the stabilization be maintained, a sideways bias would practically emerge, and we would expect the price action to break the pre-mentioned upward trend line and at the same time respect the R1 1.2070 and the 1.1935. A bearish outlook could emerge as well. For the time being, not probable, but still possible. And in such a case, we would expect, or at least require the pair to definitely break the pre-mentioned upward trend line, break the 1.1935, and start actively aiming for the 1.1815, which provided support here and here. Once again, the pair seems to have reached a make or break position. For the time being, and as long as the price action remains above the upward trend line, we tend to maintain a bullish outlook. Let's have a look at USD/JPY. USD/JPY, which tended to remain rather stable. Let me readjust the levels once again, so we have a clearer picture. And we note practically two elements here. The first is the tight range-bound motion, despite some slight volatility yesterday, and the breaking of the downward trend line, which we had drawn. That would imply a stabilization of the pair and the prevailing of a sideways bias for the motion of USD/JPY, probably just below the 138.50 resistance line, maybe even stabilizing at these levels here. On the other hand, the second element, which seems to also support the notion of a sideways movement, would be the RSI indicator below the 4-hour chart, which remains pretty close to the reading of 50 and tends to imply a rather indecisive market regarding JPY. This is a battle of the weakest, as both currencies seem to be losing some ground here against their counterparts. On the other hand, should the bulls take over for any given reason, we may see the price action breaking the 138.50 and start actively aiming for the 140 level. On the flip side, should the bears take over, we may see the price action dropping, testing, even breaking the 136.75 support line and start aiming for the 134.45. Okay, let's have a look now at USD CAD. USD CAD, which tends to maintain its downward motion. It's actually a pretty steep downward motion. Here it is. Just extended the downward trend line despite some signs of stabilization. Let me readjust the levels. We tend to maintain our bearish outlook as long as the price action remains below the downward trend line we have drawn. Also note that the RSI indicator is near the reading of 30, which also tends to imply a rather bearish sentiment for the pair. At the same time, being so low could be also an indication that the pair has reached oversold levels and could be ripe for correction higher here or some stabilization. Note that the RSI indicator has not reached the reading of 30 since the, oh my goodness, since the 6th of June. It's over a month now. And it was here at the same level as it began, and even that was only momentarily. It drove back up again. This one is sticking to the reading of 30. Anyway, let's make the necessary corrections here. Let's reverse the 1.2935 support line to resistance line, given that the price action has moved below it. And let's go hunting for a new support level. Could be somewhere here. See the upward motion here and the resistance provided, also the support provided earlier on. That could be pretty valid. Yeah, I would be keeping this. And that would be in green, please, the 1.2610 support line. Let's make the readjustments also on the labels. Final resistance line now is being placed at 1.32. Second resistance line being placed at 1.3075. First resistance line being placed at 1.2935, which used to be support line, but given that the price action has dropped considerably below it, now turns to resistance line. The repositioning of the labels here, and there's two here, and there's one, which is now being placed at 1.2835. Second support line will be at 1.2720, and the final support line being placed at 1.2610. Locking in the labels. So, as a general technical analysis comment, I would be highlighting A, that the pair has been dropping yesterday and broke the 1.2935 support line, now turned to resistance. We tend to maintain a bearish outlook for the pair as long as it remains below the downward trend line, which was incepted since must be the 14th of the month. Let's have a look. Yep, since the 14th of July. Should the bears actually maintain control over USD CAD's direction, I would expect the pair to break the 1.2835 support line and start aiming for the 1.2720. On the flip side, note that we have a tight range-bound movement over the pairs for the past 12 hours, and should the stabilization be maintained, we may see the price action breaking the mentioned downward trend line, yet remaining between the 1.2935 and the 1.2835 support and resistance levels. That would be practically a corridor of around 100 pips. On the flip side, should the bulls take over, we may see the price action, or if you prefer, we would require the price action for a bullish outlook to definitely break the pre-mentioned downward trend line, break the 1.2935, and start actively aiming for the 1.3075. For the time being, we maintain a bearish outlook. However, the tendencies for a stabilization have to be noted here. Let's have a look at AUD-USD. AUD-USD, which maintains its upward motion. Let's make the readjustments once again. There we go. So we have AUD-USD, which has been rising. It actually broke the 0.6875. That was yesterday. And now the resistance line has been turned to a support line. We see some early signs of stabilization. However, for the time being, we maintain a bullish outlook for AUD-USD as long as the price action remains above the upward trend line, which has been forming since the 14th of the month. I would also note how the RSI indicator below our 4-hour chart is, or if you prefer, remains near the reading of 70, which also tends to imply rather bullish sentiment on behalf of the market. At the same time, we must note that the price action has still some room to maneuver for the bulls, given that the upper Bollinger Band and the price action have some space left for the bulls. So I wouldn't be surprised to see the pair rising, testing the 0.6995, breaking it, and start aiming for higher grounds. On the flip side, should a stabilization take place, we may see the price action reversing direction, breaking the pre-mentioned upward trend line, yet remaining between the 0.6995 and 0.6875. Note that a possible argument for stabilization would be at the same time the RSI indicator, which has reached the reading of 70 and practically may be implying here that the pair may be a little bit overbought and it's time to stabilize and even correct a little bit lower. It's characteristic that the pair has not reached the pair's RSI indicator in the 4-hour chart, has not reached such levels since definitely that must be more than a month. Goodness gracious. Yeah, since the 13th of May. It's over 1.5 months now. So the pair seems to be, or if you prefer, the bullish sentiment seems to be pretty high. And the pair may have reached actually overbought levels here and may be stabilizing somewhat. But there is enough room for the pair to stabilize or even correct a little bit lower between its price action and the downward trend line. On the other hand, there is also room to advance further given that the upper Bollinger Band is quite higher than the actual price action. Nevertheless, should a stabilization occur, once again, I would expect the price action to break the upward trend line as a first sign of a trend reversal and to remain though within the spectrum of the 0.6995 and the 0.6875. On the other hand, should we see a bearish sentiment overtaking the direction of the pair and a selling interest being expressed by the market, we may see the price action of AUD/USD actually breaking the upward trend line, breaking the 0.6875, and start actively aiming for the 0.68, which provided support here and here. Okay, let's have a look now at some other instruments besides the FX market. We have a request for gold. Yep, let's have a look at it. We haven't visited gold in a while. Gold, which practically has remained in a sideways movement, a quite tight range-bound movement, and remains between the 1715 and the 1700, closer to the R1. And interestingly enough, the downward trend line guiding it seems about to be tested. Should that be the case, and should the stabilization proceed, we would expect the precious metals price action to remain near the current levels and break the downward trend line. At the same time, the RSI indicator seems to maintain an upward movement, yet fails to mark higher highs. So once again, I would expect the stabilization to be maintained here, despite the downward trend line. But the downward trend line should not be neglected. On the other hand, it's another indication which could cause some arguments about, or strengthen some arguments, about the possible bearish scenario for the precious metal, in which case I would expect a clear break of the 1700 support line. Note that the support line has provided support once, twice, 3, 4, 5 times in the recent history of the price action for gold. Nevertheless, I would require a clear breaking of the 1700 resistance line and the price action to start aiming for the 1678 support level. On the other hand, should a bullish scenario occur, we may see the price action definitely breaking the downward trend line, breaking the 1715, and start actively aiming for 1731 resistance level, if not even break it. Quite an interesting chart here. Let's have a look at WTI's 4 chart as well. That's an interesting one. Yep. So we have an upward trend line, which now this could be argued. On the one hand, one could argue that the upward trend line has been broken of WTI. And that would be leading it into initially a sideways motion between the 101.75 and the 95.70. Also, there was some correction in slow of the RSI indicator. However, it seems to remain at rather high levels, so I wouldn't be so quick to actually argue that the bulls have left the scene. And in this case, a colleague had pointed out that if we touch the upward trend line on the shadows of this candlestick and this candlestick, then you see that the upward trend line is being continued, and that's also being argued and supported by the idea that the commodity has been marking higher lows and higher peaks. So it's a big question here. Should the bulls take over or maintain in charge, if you prefer? I would expect nothing less than to break the 101.75 resistance line, and definitely the price action to move above this peak here. So we may see the price action rising, breaking the 101.75 before correcting once again lower and moving in this manner. On the other hand, should the bears take over, which is a possibility, not probable, but it's still a possibility which should not be neglected, we may see the price action breaking the pre-mentioned upward trend line, breaking the 95.70, and start actively aiming for the 92.60. That would be most probably a clear bearish intentions for the commodities price, for WTI's price. Once again, though, the fact that the RSI indicator is above the reading of 50 despite some stabilization for the RSI indicator, and the fact that the price action and the upper Bollinger Band have still enough space for the bulls to maneuver, also that the upward trend line seems to be maintained and the commodity is marking higher truths and higher peaks, that tends to lead us to a bullish outlook for the pair as long as the price action remains above the pre-mentioned upward trend line. Excuse me. Let's have a look at US stock markets, making a start with Dow Jones. Dow Jones, which this is the daily chart, we had a rise on Friday, on Monday correction lower, and some additional rise, quite steep, yesterday. While during today's Asian and European session, early European session, the index seems to remain rather stable. But before that, let's readjust to the 4-hour chart. Let's readjust the levels as such. Definitely, this level is now being a support line, given that the price action has moved above it. Let's have a look at the next resistance line, and we will have to, oh yeah, here it is. In red, please. And that would be the 33,470. Let's make the readjustments of the labels. $33,470 out to 32,760. Or 131,955. S1 31,345. S2 30,440. And the final support line being placed at 29,690. Actually, as an analyst, I'm quite proud of the 31,955 resistance line, which was actually respected. And it becomes even clearer in the 1-hour chart. Here it is. Mind you that the 4-hour chart provides us also with an indication of an upward trend line. So let's make the final technical comment for the index. The first comment is that a short description of the latest price action. The latest price action has been upward, and Dow Jones has risen, breaking the 31,445 resistance line, now turned to support, yet for the time being is respecting the 31,955. As for the direction, the future direction for the index, we maintain a bullish outlook as long as the price action remains above the upward trend line, which has started to form since the 14th of July. It should be noted, though, at this point that the index's RSI indicator below the 4-hour chart has reached the reading of 70. It's actually correcting a little bit lower, which may imply that the index may have reached overbought levels and may be ripe for a correction lower. Mind you that the distance between the price action and the upward trend line is substantial, so there is some room for a correction lower. On the other hand, should the bulls maintain control and regain actually the initiative over the index's direction, I wouldn't be surprised to see it breaking the 31,955 and start actively aiming for the 32,760. And that's our base scenario for now. Should, on the other hand, a stabilization take place for the index, we may see it correcting lower, breaking the pre-mentioned upward trend line, yet possibly respecting the S1 31,445 and continuing to move within this corridor of around 500 ticks. For a bearish outlook, we would require a clear breaking of the upward trend line, which would be signaled practically a trend reversal, a clear breaking of the 31,445. So the price action would go something like break 1, break 2, and start actively aiming for the 30,440 support line, which, mind you, has provided support once, twice, also here 3 times, and I would also note this one a couple of times here. So it's a pretty valid level, in my opinion. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
In this video, we will look at monetary policy and how it affects the economy. Central banks conduct a country's monetary policy to prevent the economy from overheating during expansions or boosting the economy when there is a recession. Monetary policy is the main course of action for a central bank and is usually conducted through increasing or decreasing interest rates. Interest rates affect the public's tendency to borrow. If they increase, less people will find it profitable to borrow. For example, if the cost of lending is 2%, an investment with an expected return of 3% would be profitable. On the other hand, if the lending rate was increased to 3.5%, a return of 3% would no longer be profitable. Therefore, people would be reluctant to borrow for low return investments or for investments with higher returns, as they are generally considered riskier. Similarly, higher interest rates would mean that more people are likely to just deposit their money in a bank instead of making investments somewhere else. Higher rates make borrowing more expensive, but they encourage saving. Higher interest rates also lead to stronger currency on the foreign exchange markets. This helps to reduce the price of important goods. Apart from changing the interest rate, a central bank may buy or sell government bonds, regulate foreign exchange rates, and exchange the amount of cash that the banks need to have as reserves. By managing the money supply, a central bank aims to control and manage inflation, the rate of consumption, economic growth, and liquidity. Economists, analysts, and traders closely watch monetary policy decisions and meeting minutes for clues about a central bank's next move. Such news influences the economy, specific industries, and financial markets. Stay tuned with us for a live webinar about top price action setups with Desmond, and don't forget to visit webinars page on our website to subscribe to more webinars.
Hey Santosh. Hey, good afternoon, man. Good afternoon. Right, I see Kurt here too. Good afternoon. Hey guys, welcome. Welcome to today's webinar. Thank you for thank you for tuning in nice and early. Right, yeah. Thank you for tuning in nice and early. It'll be a fun session today. Right, looking at some of the top price action setups. Right, which I've used very well in the past. Right, and yeah, I can see a whole bunch of you guys streaming in. Are you guys able to see? Are you guys able to see me? And are you guys able to hear me clearly, along with being able to see my screen? Right, just need to check a couple of these, ensure that everyone's able to see the screen. Cool. All right, yeah. So there is. One of the great things that Zoom has is that it has this little window where you can send in your chat messages, right? So please do that, right? Yeah, please do that so that I literally have another screen open by the side. So anytime any of you guys have any questions, you can send it right through. I'll do my best to answer them. Okay. Now let's give it one more minute while the rest of the people stream in, right? Give it one more minute, right? Just let me tidy up the MT4 indicators and stuff that we're showing today. Yeah, let's give it one more minute. Cool. Okay, anyway, let's begin today's session. All right, let's begin today's session. Guys, thank you for tuning in to today's webinar. Right, we're going to talk about the top price action setups, right? Top price action setups, right? And it will be talking about the top 3 single candlestick patterns, top 2 double candlestick patterns, and top 1 single candlestick patterns that we're looking at. So we're looking at single, double, and triple candlestick patterns, right? It's going to be pretty interesting, right? I'll be showing you how they look like in action later, right? And we have a giveaway. We have a little bit of a promotion later, rather, for everyone who is attending, right? And to get a copy of this price action indicator which we created, right? Or rather, which I created. And yeah, without further ado, let's begin today's session. All right. So anyway, guys, just a quick reminder that everything in this webinar is educational in nature. So please do your own due diligence before you guys trade. Nothing in this webinar should be construed as investment or trading advice. All right. Now let's begin. Let's begin today's session. Okay. For those of you guys who are here for the first time, quick introduction to myself. My name is Desmond Leong. I run the award. Let me just pull out the pen over here. Yeah, I run the award-winning research firm, Everest Fortune Group, and also the Forex Army. We're finalists for 2019, 2020, and 2021 for Best FX and Best Equity Research. Right, so very strong team of traders, right? And we usually work with the major financial institutions to forecast where the markets are heading. But we have a special partnership with IronFX where we're bringing you guys the good stuff, the juicy stuff, the institutional grade education that will help you improve your trading. Okay, now let's move on from here. Okay, the agenda for today, right? We're going to look at quickly, introduction to price action, right? We're going to look at anatomy of a candlestick. We're looking at later. We're going to be looking at some reversal and continuation setups. Mainly, we'll be looking at single candlestick patterns, right? We're looking at single, double, and triple. These are the few candlestick patterns that I personally feel are the strongest after testing out repeatedly over so many years, right? And I'll be showing at the end we have a little bit of a bonus, right, which is our candlestick indicator, giveaway. Okay, yeah, candlestick indicator right at the end. Okay, now guys, price action. Okay, the important thing about price action is that it is usually very, if you think about it, it's very effective in the tick of the action, right? When you're trading, right? Usually, when you're trading, right? Imagine we have something like this, right? So we have a support line over here, right? And we think that prices is coming down, is coming down, is coming down. We think that prices is going to come down here and it's going to bounce up, correct? So in this case, right, what we usually do is we look at this movement over here. When price touches this level, when it's in the tick of the action, that's where we look for price action. We look at candlestick patterns, right? If price comes down here and it forms, right? And we're going to zoom into here, okay? We're going to zoom in into here, right? If it forms this candlestick pattern, right? If it forms, this is a red candlestick pattern. If it forms this candlestick pattern, right? If it forms this candlestick pattern, right? Or it forms this candlestick pattern, right? We got so many different kind of candlestick patterns over here. Got 1, 2, 3. You got many. Price can form many different kind of patterns, right? In the tick of the action, right? Price action, literally, right? The candlesticks that are formed, there can be many. You can even have an engulfing candle over here, right? A few different patterns. Depending on the pattern that is formed, it affects the probability of how profitable or how accurate your setup is going to work. If it forms this kind of candlestick pattern right at here when you're expecting a bounce, this you can give it 3 stars, 3 ticks, correct? If it forms the same candlestick pattern but it's in red, right, maybe you can only give it 2 sticks. If it forms this kind of candlestick, there's nothing much to it, right? If it forms this kind of candlesticks, right, so this is clearly there's a lot of strength on the bears, but it's okay, right? The price still close above, the open. It's okay. This one you probably give it 1 candlestick. This one I probably give it maybe 2. So you notice that depending on what happens over here, price action, you need to look at this part action, right? In the tick of the action, what is happening, right? And that's one thing which this kind of candlestick patterns is really great, right? When price has triggered your entry, you will look at all of this, right? You look at all of this, you look at all these different patterns, and from there, you can decide how good your setup is going to be, whether you want to get in more, you want to allocate more to the trade, right? So this is an important thing to take note of, that candlestick patterns, price action happens in the tick of the action. All right, now you can see quite a number of additional people have streamed in, right? A quick reminder to you guys, please use this part called the chat section over here, right? I'm going to send a message through. You guys should be able to see it, right? Oh, I need to change my name. I think my name is wrong. My name is Desmond Leong, right? Yeah, please. So please use this chat section to send your messages through. Do try, if I may request, right? it's okay to send some messages once in a while. Otherwise, it's gonna sound pretty lonely for me, right? As if I'm talking to it's like no one, right? So it'd be nice if you guys can send some questions through, right? At least I know guys are listening, or if you have questions, right, I can answer them right away. Okay, so please, if you may do that for me. Okay, now let's continue from here, right? The next thing I'm going to focus on is this thing called anatomy of a candlestick, right? Anatomy of a candlestick, right? So we got a bullish candlestick here and we got bearish candlestick. Okay, got bullish and a bearish candlestick over here. What I need to know is that over here is where price opens. Okay, this is the open price. When the closing price is above the open price, right? That's where you get a green candlestick. You get a green candlestick. If the closing price is below the open price, as you can see over here, that's where you get a red candlestick, showing that it's a bearish candlestick. The wicks over here are just the upper and low. We call it the wick. Some of you guys call it the shadow. Some of you guys call it the wick, right? It just basically means the highest point of price and the lowest point of price during this candlestick. So in this example, price could have opened over here. It could have went all the way to the top, all the way to the bottom, all the way, and it closed over here. So this could be the journey. This could be journey of a candlestick. It could have been the other way too. It could have opened over here, drop all the way down first, come up, drop down, come up, drop down. But as long as it reaches the high, it reaches the low, and it closes over here, that is basically what it means, right? So when you look at a candlestick, it's just good to know what it means, right? This is the anatomy of a candlestick. Okay, so let's dive into how you can use these candlestick patterns to really trade, and this is where the juicy stuff comes in. All right, so let's just talk about in trading. There are two main ways that people trade, right? One is the reversal and one is the bounce. So reversals, right? If you see a key level over here, reversals are this, right? Bam, you are playing the reversal. The other one is the breakout, right? You have the same move. When price comes down here, bam, it goes through. So there are really two styles of playing, of trading. You're either playing reversals or you're either playing breakouts. So the great thing is that candlestick patterns do a really good job in helping you filter out whether this breakout is a confirmed breakout. So I think many of us have experienced situations where it looks like, for example, it looks like price might break out over here. You think that is breaking out the channel, but then it reverses, right? Or maybe it looks like price is breaking out this little bit of trend line. You think it's going to go out, but then it reverses upwards instead, right? So one way to avoid getting what I call faked out, right? Faked out is FAKED. One way of getting faked out to avoid one way to avoid getting faked out is by using candlestick patterns. They're really effective in helping you avoid getting faked out, because it tells you what is happening there and then. It tells you what the market is feeling, right? And like, for example, in this case over here, right, a very nice doji, or rather shooting star formation, suggests that there is unlikely to see prices break up further, because there's a lot of it's a bearish reversal sign, right? So over here, this is a very nice hammer. A little bit of a hammer formation, suggesting that there's a lot of price rejection when price is trying to break out the channel. It's another indication that, hey, this breakout is not as obvious as it seems, right? It will likely just not break out and just bounce from here, right? So candlestick patterns are very good in helping you get more accurate reversals and more accurate breakouts. Now, so let's look at this example, a reversal. Right, so we can see price dropping lower, and it has now touched the channel, right? It has touched the channel and it has formed a morning star formation. The morning star formation is like this, right? So you got one candle here, you got something like this kind of a candle where there's very small body, right? And then you have a bullish candle, right? So you got bearish candle over here, right? You got this this thing looks like a star in the sky, right? And you got bullish candle. So a morning star formation is a very good sign that, price is going to reverse from there. You notice how you can combine a morning star formation with a channel support, right? With a channel support. So you don't only have one reasons why price is going to bounce, but you have two reasons, right? Trend line support and you got channel support. You got three reasons why price is going to bounce. From here, we can see that price indeed, it bounces up really nicely, right? It bounces up really nicely. And this is just a very good example of how you can use candlestick formations, price action at key reversal, at key support and resistance levels to know how to know the probability to increase the probability of your trades working out. Okay, now one thing you notice is that there's already, if you guys have been following our previous webinars on overlap support and resistance and stuff like that, right? You notice that there's a very nice resistance level over here. Price not only bounce up from here, but you have one candle, two candles, and three candles that rise up very strongly. I think it's over here 1, 2, 3. Anyone want to take a guess? What kind of candlestick pattern is this? Where you have three green candles in a row. You have three green candles in a row. Does anyone want to take a guess? What is this particular kind of candlestick pattern? You don't need to reply to everyone. You can reply to hosts and panelists. You can reply to everyone, right? I can see some people replying to hosts and analysts, right? And panelists. The answer is correct. It is the three white crows. No, not three white crows. I mean three white soldiers, right? So we have this thing called a three white soldiers kind of candlestick pattern, which is a very good indication that of momentum in a single direction, right? So if price breaks out of this resistance using a three white crows pattern, it gives you much more confidence that price will continue up from here, right? Versus price, using a different kind of candlestick pattern. So candlestick patterns are very good for reversals, and it's also very good for breakouts, right? So like in this example here, we have a very nice resistance area over here. Price react off once, price bounce off once, bounce off another time, react off, right? We have a very nice resistance level over here. So it's clearly a resistance level to break through. What happens since then is that you have 1, 2, 3. You got a three white crow formation, three white soldier formation. You got a three white soldier formation, and the close of the third soldier is above this resistance level. What this then suggests is that it can actually give you a much higher confidence that price is going to move up from here. The soldiers, as if they are marching, right? They're going to continue marching on, right? They got the momentum on their side. They're going to continue moving forward, right? And this is another way where you can contrast this to the third candle. If the third candle was something like this, right? Maybe like this is a red candle, but it's like this, right? Then there's a higher chance that price might reverse from here. But because it has a three white soldier kind of formation, right? It gives you a very strong chance that the breakout is going to be successful, right? True enough, you got a three white soldiers formation over here, and bam, it just takes off in that direction. Okay, so you can see how using price action, using different kind of candlestick patterns can actually greatly increase your chances of having a trade, a breakout, or reversal work nicely. Okay, so the opposite of three white soldiers is of course this pattern called the three black crows. One black crow, two black crows, three black crows. A key point to take note about whether it's a three white soldiers or a three black crows is that generally they are sizable candles. What I mean by this is that the soldiers need to be big soldiers. The soldiers over here, right? They need to be 1, 2, 3. They need to be sizable soldiers, right? They need to be strong, right? They cannot be a tiny soldier, right? A tiny soldier is not going to be very strong, right? Tiny soldiers, you can just squish them, right? They're not going to be that strong. But if you got three strong soldiers, right, that's where you have the enough momentum to carry the trade forward. Same thing with crows. You need 3 big crows over here. You cannot have 3 tiny crows, 3 tiny crows over here and expect prices to have enough momentum to break out in their direction, right? So a key thing to consider is that a lot of people, when they look at the definition of 3 white soldiers, right? Okay, you need 3 bullish candles in a row, right? And they look at these 3 bullish candles is very different from these 3 bullish candles, right? All the way up here. This version 1 is very different from version 2. Version 2 is a very strong, it's maybe the Captain Americas, right? Version 2 is like Captain Americas. Version 1 is like, the weak soldiers, right? They haven't even passed the basic training yet or something, right? So important consideration when it comes to trading this, using price action to trade. I'm going to touch on the top 3 single candlestick patterns I like. Okay. Now, the first one, right, is the hammer stick candle. Right. Why is a hammer? Is that a hammer is actually at the bottom of you look at it, it looks like a hammer. How does a hammer look like? This is how a hammer looks like, right? So same thing over here. Right, the hammer is one of my favorite candlestick patterns. Right, what basically happens here? Right, so you must think about it from a psychological point of view. The price opens over here. Right, price open over here. The bears push prices all the way down, all the way down, all the way down, all the way down. Right, what happened next is that the bulls take over. They push it up all the way up to the entry, and they push it up even further. Right, they push it up even further, and they close to the top. You notice that there's very little very little shadow. There's very little wick right at the top, right, and it closes off over here. This momentum up is a very, very strong bullish momentum. Okay, and that is why it's one of the strongest kind of single candlestick patterns you can use. Now, the important thing about a hammer is that it needs to look like a hammer. Right, hammers have a big head. Right, hammers have a big head and hammers have a long hand. A hammer cannot look like this, right? This cannot be a hammer, right? This is a, I don't know, this is a toy hammer. This is a thumbtack. This is something else. This is definitely not a hammer, right? So when you're looking at hammer, remember, you need a long wick down here, because this long wick shows that the bears actually push prices down quite a bit, but the bulls took over and really, really push them all the way back to entry and even beyond the entry, higher to the closing price up there, right? So that's the important thing about hammer stick candles. Okay. Now the same hammer, when it is at the top of so this I would give it 3 ticks. Okay, this is a very strong pattern. This pattern over here, I actually will only give it 1 tick. Okay. Now the reason for this is because the same hammer candlestick pattern, right, at the top of we call it hanging man, right? We call it hanging man at the top of at the top of a trend, right? The reason why it is not as effective, right, is because you must look at the psychology of the rather anatomy of the candle. We have price opening over here. Price open over here. The bears initially push prices all the way down, all the way down, all the way down, right? But the bulls took over and it pushed it all the way up, all the way up, all the way up. It made up for a lot of the position and it ended over here. So if you think about it, the bulls have quite a bit of momentum, right, pushing prices up, right? So that is very different, because in this case, it pushes it all the way up to entry and even higher, right? For the bearish candlestick, yeah, it pushes this up, right? But the most recent action that happened is that, price has been, it shows that there's a lot of bears that are coming, a lot of bulls that are coming into here. So a hanging man candlestick pattern, I'm only going to give it 1 tick, right? Versus a hammer candlestick pattern where you got 3 ticks for how effective it is. But the opposite is now true for here. A shooting star candlestick formation, a single shooting star candlestick formation has 3 ticks for me, right? It's one of the best. The reason for this is because you can see it over here. Price opens over here. The bulls push it all the way up, all the way up, all the way up. The bears take over, it pushes it all the way down, and not only back to the entry, but even slightly beyond the entry and right to the closing price. So that to me shows that there's a lot of bearish downside momentum that is pushing prices down from here, which is why the shooting star formation is actually is the equivalent of this. Is the equivalent of this, right? The shooting star formation is a very good single candlestick pattern to suggest bearishness, right? For the bullish candlestick pattern, right, the inverted hammer, I'm only going to give it 1 star for the same reason. You need to think about it from an anatomy of a candle. Price opens over here, it pushes it up all the way. It thought it was going for a fun ride, easy ride, but the bears took over and it pushed it all the way back, and it closes, pretty close to its open price, right? So it kind of shows that the bears are actually pretty strong, right? And they can really take the fight to the bulls if they want to. That's why inverted hammer kind of candlestick is only 1 tick for me. But a shooting star candlestick, right, is 3 ticks for bearish. 3 ticks for bearish. This is a hammer is 3 tick for bullish, right? Those are the important patterns which, if you have a pen and paper, you want to take it down, you want to take a screenshot. These are the important ones that you need to take note of. Okay. Now, the last single candlestick pattern, which I think is very, very effective, is the dragonfly doji and the gravestone doji, right? So the dragonfly doji, right, it looks like it looks like a dragonfly. This is how a dragonfly looks like, something like that, right? And it got wings here. Kind of look like that, but you can see a dragonfly doji is like that, right? So this resembles a dragonfly doji. This resembles a gravestone, right? I don't need to remind you guys what a gravestone is, but yeah, it reminds a gravestone. Dragonfly dojis are very, very effective at the bottom of a trend, right? Because what has happened? Price opened here, it pushed it all the way down. It took it. The important thing about dragonflies is that you notice a dragonfly has a small body, a small head, but a super long body, right? The long body is important because in this case, the long body shows that price was pushed all the way down by the bears, but the bulls took over, pushed it all the way, and they went all the way back to the open price, right? So the dragonfly dojis are super duper strong. They're only strong at the bottom of a trend. They are not so strong at the top, right? Because if you have it at the top, right, if you think about it, you got a candle, you got a candle, and then you got a candle. You got a dragonfly doji over here, right? It actually says that the bulls tried to push up. No, you can't do. A dragonfly doji won't be like. A dragonfly doji will be like that over here, right? It shows you the bulls pushing down, it pushed back up, and it couldn't push up any further. Because it couldn't push up any further, it actually is not such a great bullish reversal sign. Dragonfly dojis are most effective when you find it at the bottom of a trend. I'll give this 2 stars, 2 ticks. Okay. Gravestone dojis. Gravestone dojis are very effective at the top of trend. It shows you that price open over here. Bulls were pushing up all the way to the top. The bears took over, won them, pushed it all the way down, right? And it ended at the entry. So what is happening? There's this nice little downside momentum that's going to push prices down from here. That's why the gravestone doji is very good when you find it at the top of a trend, right? But it's not going to be very effective if you find it at the bottom of a trend. Okay. Now, so I'm going to give the gravestone doji 2 ticks, as you can see over here. Now next, engulfing candles, right? Engulfing candles, right? The first thing I want to do is that my favorite double candlestick pattern is the engulfing candle. Engulfing candle basically means that, right, if this is a bullish engulfing candle, it means that the bullish candle completely engulfs, right? The open and the close basically is bigger than the open and the close of the previous candle. You can see the open and the close is bigger than the open and close of the previous candle. When you're trading stocks, for example, when you're trading stocks, you might see something like this, a bearish candle and a bullish candle over here. However, when you're trading forex, because the forex market is open 24/5, right? There is rarely ever time where you're going to see like this kind of gap over here, right? Instead, you will see something more similar to this, where the open price is pretty similar, pretty close, This open price is very close to this close price, right? So that's the difference when it comes to forex. Don't expect to see such a clear engulfing engulfing pattern with forex. An important tip that I need to teach you guys over here is that the engulfing candle, this engulfing candle is only as strong, right? It's only as strong as the enemy it wins. Okay. For example, if I have two different engulfing candles, like let's talk about bullish engulfing candle. I have one candle here, one candlestick over here, right? And this is a bearish candlestick. And I have this bullish candlestick. Versus I have one candlestick over here. This is a bearish candlestick. And this is a bullish candlestick. Between 1 and 2, you need to ask yourself, which engulfing candle, which bullish engulfing candle pattern is stronger? Right? If you think about it, right? Have you ever been to those boxing matches? You got featherweight, you got lightweight, you know, you got heavyweight, you got different people boxing, you know, they compete in the same class. If you watch the Premier League, right? There's a Premier League, there's the Coca-Cola League, right? There's the Championship, right? There are those that are lower. In this example, it's like Manchester United, right? Manchester United plays against maybe Luton Town, right? This is a Premier League side like Manchester United playing against like Luton Town, which is maybe a Championship side. When Manchester United wins, is it something fantastic? Not really. People will go like, yeah, you know, you're expected to win. You're Manchester United. You're playing against a Championship team. Yeah, you know, you're expected to win. There's nothing great. But in this case, right, it could be an example where maybe this is Manchester United, and this is maybe I'm gonna call it Manchester City. So Man U wins Man City, right? This is something big to talk about, right? Clearly, it shows that wow, you are strong, right? You're strong, right? In this case, your strong bullish candlestick is going to go up, right? And so your opponent matters when it comes to engulfing candles. If you're just going to fight a tiny candle before you, no one's going to care. No one's going to care that you are an engulfing candle, right? No one's going to care how strong it is. But if you have a previous candle which was really big and your engulfing candle that's even bigger, you won a big battle, that is worthy of headline news, right? That is worthy to see that, okay, price might be going off in this direction very nicely. Okay, so this is one important consideration that when you're trading engulfing candles is that you need to see the size of the candlesticks. Another important thing to take note of is that engulfing candles, stay away from tiny engulfing candles, right? If you have one tiny candle here, yep, and you got a bigger, tinier candle here, one bearish candle, one bullish candle, you know, is this might be a bullish engulfing, but this is not as great as this is not as great as this bullish engulfing over here, right? This is too small, right? You know, it's like two championship teams playing with each other, right? Yeah, they win, that's great, you know, they are of equal size, but in the bigger picture of things, no one watches the championship, like everyone watches the Premier League, right? So this is where the big battles occur, right? You want to keep your eye out on the bigger battles. You don't want to see the tiny battles and don't want to get distracted by them, okay? The other favorite double candlestick pattern I have are the tweezer bottoms and the tweezer tops, okay? Tweezer bottoms, as the name suggests, right? The wick, as you can see over here, it looks like a tweezer, right? And the tweezers, the thing about tweezers is that their little arms, the wicks tend to be about at the same level. One should not be a lot lower than the other, or one should not be a lot higher than the other, but they should be roughly at the same length, because what it says is that if you look at it, price open over here, went down, all the way down, and it end over here. Now, when it opens over here, not only does it go down, it goes down to the exact same price, it bounces up, it goes past your initial closing price, and it ends over here. It closes higher, right? So a tweezer bottom is a very good sign. It's actually a pretty good sign, right, for prices going to a bounce. I would give this a good 3 tick, right? It's the same thing with a tweezer top. I will give it a good 3 tick, right? That is going to be a very nice bearish move. Same thing to do with bullish engulfing. If it's a big enough bullish engulfing, I'll give it a good 2 ticks. Good enough bearish engulfing, I'll give it a good 2 ticks. Okay, so just take note of like which are the stronger single and double candlestick patterns over here. The last candlestick pattern I'll talk about, right, is the triple candlestick patterns. Morning star and evening star, right? Morning stars, you usually see them less. You notice there's a nice big gap over here, right? There's a nice big gap over here, right? There's a nice big gap over here. So morning and evening stars, right? This gap happens more in the stock market or when you're trading the daily chart or maybe the weekly chart. Oh yeah, I mean a daily chart over the weekend, right? But when you're trading forex, you are most likely going to see something like that. Something like that. This is bearish candlestick. You're going to see a bullish candlestick over here, right? And then you're going to see another bullish candlestick over here, right? It's most likely going to be this case. There will not be these big gaps in between because, again, it's a forex market. So there's less time where the market is closed, right? And less gaps that you're going to see. But these are two of my, this is one of my favorite triple candlestick pattern, right? The morning star formation where, comes down, bounces up, right? And the evening star formation where, you got a nice candle, price closes up, very small, very little indecision, but, it's a nice candlestick formation there, but you need to wait for this confirmation, right? Because this forms that nice little reversal pattern, this forms a nice little reversal pattern, right? And it suggests that prices can continue from there. Of course, again, an important consideration to take note of. My last favorite triple candlestick pattern is the 3 black crows and 3 white soldiers, which I mentioned to you previously, right? The 3 white soldiers, right? You usually want to look for soldiers which are of the same size. You want to look at crows which are of the same size. So important considerations, right? They need to be sizable. They need to be sizable, and they need to be big. No, it's not big. I mean of equal. The best case is if they are of equal size, right? So sizable means they're big, right? They're not these tiny crows. These tiny crows won't mean much, right? But they are big enough, right? They're big enough to suggest that these are big players, right? This is big, 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 this is big. They're big enough so that they know, people know that they are a force to be reckoned with. Okay. Yeah. So 3 black crows and 3 white soldiers are two of my is another of my favorite triple candlestick pattern you can use when trading, especially useful when you're playing because you can use it to play breakouts, you can use it to play reversals. In this case, once at a reversal, right, if you notice 1, 2, 3 3 white crows, you have a much higher chance that the momentum will take you all the way there, right? At the same time, right, in our example over here, you can see that 3 white soldiers can happen. 3 white soldiers can happen, right? And it can also lead to the 3 white soldiers breaking a resistance level, right? And it gives you much more, a much higher chance that price might work out quite nicely in your favor, right? It might continue to rise quite nicely in the direction that the 3 white soldiers are marching. Okay. Now, guys, now I do want to share with you guys a couple of things. One is the VIP room, and the other is the candlestick indicator, which we currently have, right? So we are gonna have a nice little promotion for you guys to get access to this candlestick indicator. It's a pretty good indicator because what it does is that it actually calculates, right? It doesn't only look for the bullish, like the candlestick pattern, right? But it actually calculates the drop before the candlestick pattern. Because when you find a candlestick pattern over here, right, if you don't know how to filter it properly and there was a previous candlestick pattern here, previous candlestick pattern here, it's not going to be effective. So it finds a little bit less candlestick patterns, but the ones that it does find is super powerful, right? So you notice that yes, a nice, how it does look for patterns is that if there's a bearish reversal pattern, there's a nice little sustained rise, right? Before finding it, then you look for the reversal. You cannot look for a shooting star formation like this, right? A shooting star formation should not be like this, right? A going up, right? Coming down here, right? Small little shooting star formation over here, and then going up again, right? So in this example, right, what it does is that it looks for a nice sustained rise before a bearish reversal pattern. And in this case, it looks for a nice sustained drop before a bullish reversal formation. The reason why, if you do not use these filters, what you might end up getting is this. This is, if you search for most popular like top candlestick pattern indicators out there, this is one of the indicators that you're going to get. You can buy, sell, sell. It gives you literally a candlestick pattern every single, every other bar, you get a candlestick pattern, right? If you tell you to buy when there's a bullish candlestick pattern and sell when there's a bearish candlestick pattern, you're going to be losing a lot of money. Okay, you can see there's just way too many candlestick patterns over here. In the same way, over here, right, there's this other one, there's a literally bearish candlestick patterns, bullish candlestick patterns. Every single candlestick pattern is just lumped together and it gives you a very low chance of being correct. Okay. Instead, what we have done is we've created a candlestick indicator that allows you, if you look at it, it finds a nice candlestick pattern over here, nice reversal. Shooting star formation, reversal, right? Shooting star formation, reversal, right? It finds very nice candlestick patterns. What we've done is we've actually put into place a lot. You can see these are all the indicator I created has so many fields to use that we had to use an Excel sheet just to calculate, just to create the settings, right? The settings, there's so many different parameters that are used to make the most accurate kind of candlestick patterns that we were not able to squeeze it into an indicator. MT4 does not have enough, basically, the program could not support the number of fields that we had. So we needed to put it into another indicator. No, we need to put it into an Excel sheet to read from. An interesting thing is that, you can search for best candlestick pattern indicator. Yeah, I think you can search for best candlestick pattern indicator MT4, I think. Yeah, there we go. So you search even for like best candlestick pattern indicator MT4, you can see we're up here among the top few results, like the candlestick pattern indicator we created, right? Very, very strong candlestick pattern indicator, which I'll be showing you, right? This is an example of the candlestick pattern indicator, right? Let me see if I can, if there's a pen. I don't have a pen over here, all right? But you can see how it has found, in this case, a bullish, let's see, a bullish engulfing candle. Very nice bullish engulfing. And that's a nice bounce. Let me just pick this, oops, sorry. I have a drawing tool over here, right? And I'm going to pick this, right? You can see how it found this very nice pattern. It bounced up nicely. It found a very nice bullish dragonfly doji and price really just bounced off very nicely from there, right? I think it has a couple more times. Bullish hammer pattern, it bounced up very nicely. Evening star pattern, it dropped very nicely. I think, this one I found multiple. Shooting star formation, shooting star, right? Many of it together, right? And it's a nice little drop from there. This one didn't work out very well. We were hoping that this hammer pattern would bounce, but it didn't work out. So this one didn't work out, but this shooting star dropped very nicely. This strong bearish engulfing candle dropped very nicely. Yes, I will upload this to YouTube, right? I'll show you how to get access to it. But just looking at the candlestick patterns over here, right? This was a nice little reversal, right? Nice reversal over here. This one was a small reversal, didn't do that great. This movement, nice bounce from here, nice reversal from here. This one didn't do well. This one, would have been a lot losing trade. This was a nice shooting star formation. This was a nice dragonfly doji, bouncing a bit. Nice drop, nice bounce, right? So a lot of different kind of patterns, as you can see. Nice drop, nice drop. This one didn't work out very well, but you notice that the hit rate, this pattern over here, price rising from there, the hit rate is pretty good, right? Honestly, the hit rate is pretty good for this indicator, right? So you can see after this, it bounces up, After this pattern, this shooting star pattern, it drops very nicely, right? So we have one of the best candlestick patterns out there. I think usually it costs 150 USD just to get access to it. But we're running a promotion where as long as you have an IronFX account, you're gonna with $250 in it, you're gonna get access to it, right? I'm gonna show you that this is how it does, right? It actually calculates the size of the drop before it, size of the drop before the pattern occurs, and then it tells you how effective, you know, the possibility of the price rising nicely in your favor, right? So this, you can be 5 times ATR with 30 bars, or you can have 100 bars and 10 times ATR. So this shows that there must be a super duper big rise before a nice candlestick pattern, and usually that gives way to a very nice big drop. Because if you do not have this ATR filter, what happens is this: hammer formation, hammer formation. So you look at this, right? You have, if imagine you're selling over here, you got all these bullish hammerstick patterns. This candlestick indicator is no, right? You're going to lose a lot of money here. The same thing over here, you're going to lose a lot of money, right? You need the filter, right? Because once you have a filter like this, right? This is a strong filter to give yourself before a pattern, then you can see a nice rise. Okay, so this is one of the tricks that I hope to be teaching you guys, right? Whenever you're looking for candlestick patterns, right, you need to look for not only the pattern, but the move that is leading up to the pattern. Okay, the move that is leading up to the pattern. Now, this is another example, right? Yeah, maybe we can load the indicator and we can see a couple of how it works in real time, right? I cannot change any of these results. I'll just load it and show you guys, right? You can see a hammer pattern, very nice drop, but it first requires a nice little rise, hanging man, then it drops, right? The indicator is very simple. You just load it onto your chart, right? And you can see it shows you all the indicators in real time when it is being formed, right? Nice engulfing candle here, nice hanging man. This shooting star formation was very nice before it dropped. Engulfing candle was nice here before it bounced. This didn't work very nicely. This one touch, you would probably have got stopped out of this trade, right? Evening star here. This engulfing candle, right? It's nice. Yeah. This one didn't. This didn't work out very well. These two trades didn't work out very well. These trades did work out very nice. It caught one of the biggest drops, right? With candlestick. I think it's a very nice drop from here, right? So yeah, you know, this candlestick pattern indicator, right, is something which you can use to complement your trading. Okay. Now, one of the other promotions that we have for you here is that you can actually head over to vip.ironfx.com, right? As long as you have, right, what's minimum account size? Okay, Kurt, the minimum account size, right? Just let me put it up for you over here. The minimum account size is that as long as you have a live IronFX account, all you need is to fund $250. If you already have a IronFX account, right, you just need to put in an additional $250, right? Email, this is the email that you want to email, right? This guy and me, Desmond Leong, right? This is the IronFX emails, right? Email us, and your subject is IronFX webinar promotion. Include your MT4 account number, and I will give you two things, right? First, I will give you the candlestick indicator. First, I'll give you the candlestick indicator, right? Second, we'll give you access to the VIP room that will be launching. I think we are already launching pretty soon. To import the indicator is quite simple. You just need to go and put it into your, you just need to load file, open data folder, right? MQL4, indicator. You just need to paste it into here. And there you go. Paste it into here and you get access and you get to load this indicator for your trading. Okay. Yeah, so this I can see some people asking. This does not include current balance, right? Actually, yeah, I believe it actually does not include current balance, right? So you need to, if you have an existing account, you need to top up $250, right, just to get access to this. This is to be fair to the new people and the existing people, right? I hope you understand, Kurt. Right? So as long as you just put in extra, right, you just need to tell them, hey, you know, I funded a little bit more in my account, right? And you will get access to this. Now, let me, oh, wait, just give me a second. I need to copy this email and send to you guys over here. These are the two emails that you want to you want to be sending to. Okay, I just copied it and pasted it in the chat for you guys, right? So yep, you just send these two. Your subject, subject should be the IronFX webinar promotion, and include your MT4 account number, and you get access to that. Okay, you will also get access to our VIP room, right? In the VIP room, what you'll be able to do is you can actually come in here, right? You can see a chart, right? And maybe you can say, you find a support level over here. Hey, Desmond, right? Is this a nice support level? What level are you referring to? Highlight the text. Click this button, link object to text. Click this nice little line you just drew. You'll notice that it lights up and you send the message through. So what happens is that when I see your message and I hover my mouse over this, I can see exactly the line that you're referring to. So you can practice your trend lines, you can practice your support and resistance, you can practice your Fibonacci, right? Anything that you do, you can link to your text and I can reply you. So this is an additional bonus that we're going to give for you guys. As long as you have $250 in your IronFX account, right? In whether you fund a new account or you deposit another $250, right? You're going to get access to the indicator and also the VIP room, right? Which is which is great, right? Because I think IronFX, we are previously, if you remember, it was a free access to the VIP room, but now they're raising the bar. It's getting they're slowly making it more expensive for people to get access to it. So I do want to encourage you that if you have if you can, just grab early access before the bar is raised even further and they require like $5,000, $10,000 just to get access to the VIP room. Now they're running a promotion. It used to be free. Now it's just $250 in your account. So you just need to put in $250 in your account and you get access to this. Okay. Now, guys, Kurt, I hope that answers your question, right? I hope that answers your question on how to get access to the candlestick indicator and to the VIP room, right? Let me just put up a chat here. Here we go. Yeah, I hope that answers your question, right, guys? If no one else has any questions, rather, thanks for staying throughout this entire webinar, right? My name is Desmond, right? If anything, right, I want to encourage you guys that, I'm a young guy. I'm 32 years old, right? I already am a full-time trader, right? Trading for a living, right? I run an entire prop trading firm over here, right? You just need to learn the right techniques, right? The amount of investments that IronFX is paying just for us to come and teach you guys is crazy, right? So take full advantage of it. Use the indicators, use the tools, learn the education. These are not things that you can find on Baby Pips. This is really top tier education, which is coming to you for free, right? Take full advantage of it, right? Get VIP room access. You get direct access to me compared to some other, treasury departments out there or hedge funds, which pay like 10 grand a month just to get access to us, right? You get access to us for free, courtesy of IronFX. Take full advantage of it, right? And yeah, I hope to see you guys in the VIP room. I hope to see you guys more often, right? Kurt, if you have just deposited $500 a couple of weeks ago, do me a favor, still send that email, right? I believe since it's more than 250, we can make an exception for that. Okay. Thank you so much for your time, guys. Thank you for staying throughout this entire webinar. Right. I hope you enjoyed this webinar. I hope you guys will be a little bit more active next time, talk a little bit more so I don't feel like I'm talking to myself all the time. Otherwise, all right, guys, I'll catch you guys tomorrow for our live trading session, right? Go register for it if you have not, right? It's all you need to do is to go to IronFX.com. Let me send you the link. Please register for it, right? Go to IronFX School. Oops, give it a second. Webinars. And you probably want to go to this one called Trading Strategy Clinic. Very fun trading strategy clinic, right? Over here, you get to come, you get to ask us your strategies, and we get to answer it in real time for you. Okay, so pretty fun stuff. All right. Yeah. So we actually diagnose your strategy for you. We see what is right, what is wrong, how we can improve it. Okay. Same time, same place tomorrow. Thank you very much, guys. Stay. If there's nothing else from me, stay safe, trade safe, and I'll catch you guys again tomorrow. Tomorrow. Okay. Adios, guys. Bye bye.
Hello everyone, my name is Emily and today we will look at some of the basic terms so you can feel more comfortable before you start trading Forex. There is lots to learn, but here we will give you the most common terms used by traders. If you want to learn more, you can always head over to our website and read our terms in our glossary under the IronFX school. So, the first one to look at is the currency pair. When you trade Forex, you will see that you're always trading currencies in pairs. One currency is bought while the other one is sold. Together, they make up the exchange rate. So what is an exchange rate? This is the rate of which one's country currency can be exchanged for another currency. We talked about currency pairs. Each currency pair is made up of the base and quote currency. So what is the base currency? This is the currency that comes first in the currency pair. So for example, GBP USD, the GBP is the base currency. So what is the quote currency now? It's the second currency quoted in a currency pair. So for example, GBP USD, the quote currency is the USD. Also refer to going long or short. Let's see what these two terms mean. A long position refers to buying an asset with the expectation that its price will go up. On the other hand, we have the short position, which refers to selling a currency pair with the expectation that its price will fall. Two more terms that are linked is the bid and ask price. The bid price is the market price for selling an asset, and the ask price is the market price for buying an asset. Now, many traders also refer to small and big spreads. Let's see what spread means. The spread is the difference between the bid and the ask price. Thank you so much for joining us today, guys. See you tomorrow. Bye-bye.